I guess I'll cover the first one, equity line of credit to get cash out of your property. I mean, there's usually, let me see, just a couple of ways to get the equity out of your home. The obvious one is to sell it. If you don't want to do that, that makes sense. You can refinance, but a lot of my clients have 3% rates, 4% rate. Right now, the rates are in the 6s, 7. So a lot of people don't want to lose that low rate to get the cash out. So another angle would be a home equity line of credit. A lot of times they're adjustable. We are direct. Let me back up just a moment. I jumped right into it. My name's Tony Croft on the screen there. I've been doing mortgages for 20 years. I got my license in New Jersey in 2004. 20 years later, I'm still doing it. So I work with a company. I was a mortgage broker for many years. I work with a direct lender, but we also broker as well. So you kind of get the best of both worlds. All these years, 19 years, I never did home equity lines. I already referred them out because it's just a small loan, and the companies I work for never did them. Well, the company I work for now, Movement Mortgage, great company. We're in the top 10 nationally. They rolled out a home equity line program about a year ago. It's been really good. I've done a few already, and I have a couple in the works, but it's unlike a traditional home equity line of credit that's adjustable up and down. We do have a fixed rate option, which is nice. And so instead of, refinancing your existing mortgage, which you might have 4 or 5% or whatever, you can just take out a small home equity line, 40,000, 100,000, couple of 100,000. And the rate's higher because it's a home equity line, but it's not as bad as refinancing the whole loan program. So you still have your low rate on the first mortgage, and then you can have a second mortgage. And the money from that, you can use for anything you want. It's your money. Renovations, maybe down payment on the second home or an investment property, all those kind of things. Travel, whatever you want to do. So again, we do have the in-house version. Anyone interested, just let me know, or let your realtor know. They'll tell me. Let's see here. Buying a bigger home. Okay. Buying another home before selling yours. That's tricky. Anyone try to do that? No? Not yet? Okay. So I've done it. I've done it where we sold the home, was under contract, and then during that process, 30 days or so, 45 days, they bought another home and they scheduled it for the same day or a day or two later. Very stressful. I've done it. I've had double closings the same day. They sold their house in the morning and they bought the house in the afternoon. However, it doesn't always work out that smoothly. Sometimes you have to wait a day or two or longer. So a lot of people prefer to maybe get the new house, move in, and then sell their home. The problem is, in order to do that, you have to qualify for both mortgage payments. And that's tough to do sometimes. So there's a couple of workarounds. One is I always get calls about bridge loans. That's like a separate loan to get you through the purchase. So basically it lends you money. But the problem with a bridge loan, in my opinion, it's like a double closing. You're paying twice. But that could work. Another option is, stop me if you have any questions. Another option is we have an internal program. It's called the Movement Purchase Power. I have to get out my notes. So basically the program is we'll buy your home from you, unlocking up to 70% of your equity. And then you can buy your new home, move in, close, move in. All the stress is sort of gone. And while once you move into your new home, we'll prepare your old home for sale along with your real estate agents. They'll list it. You get to avoid living through the dusty renovations, stressful closed showings, and all that stuff because you're already gone. And then we'll list it and sell it. Again, whoever your realtor is, in this case, the Bansal team, right?
You have got very good deals. So right now buy some condo, buy some other investment, build your investment portfolio. That will give you better ROI with 500. Because if you put that money in that one house, it's only you're putting everything in one basket. So
Yeah.
don't do that.
Well, Yeah, I was
I
just
think-
gonna that's great,
Yeah, right.
thank you. When you put money into your home by paying extra towards the principal or recasting, that's not an investment.
Yeah, that's
That has nothing to do with your property will go up in value with or without that extra equity.
correct.
It doesn't make a difference. So properties are appreciating 4.5% or 5% a year. It doesn't matter how much equity. You can
Yeah.
have zero equity, it's still gonna increase in value. So just, maybe you wanna talk with a financial planner before you make a decision on where to put your money, or you
Yeah,
can
right.
call me. It's different for every person, really.
Yeah.
I think
Oh,
I
yes.
do want to just cover one point regarding investment property that he talked about. Because when you buy investment property, you are depreciating that property 3% every year. So in 27.5 years, you depreciated the whole property. So, and that property for $250,000, now it has become 500,000. So you can, after 27.5 years, you sell that property, you do 1031 exchange. And then whatever equity you have now, you can buy $1 million property. So you can keep investing it, get the cash flow from there and build the equity. And when you transfer that investment property to your kids, as an inheritance, they can start depreciating it because now they get it at a new cost basis and they can depreciate it at that time. So it's just so many tax advantages that you can take. And that rent always goes up. The mortgage you get one time, it's fixed. It's getting paid off. So the improvement, so if the condo is, let's say, $200,000 improvement, only 100,000 is a land value. Land never depreciate, but that building you can depreciate in 27.5 years. It can depreciate 100%. Once it's 100% depreciated, you cannot depreciate anymore. You should move to a bigger property. That's called 1031 exchange. So another good.
That's
good-
another whole different topic, and we can create another seminar on that. But it's really interesting how these things work and how you can.
So that's why
Trifold and
we
money.
brought him to help people take the money from their equity from their current home, buy investment property, because that's how you can create wealth. That's how
Absolutely.
you can grow.
Yeah, it's all about creating wealth. All of you as a homeowners, in different ways.
Mhm.
Definitely.
1030, do you have a title guy here today?
No,
No, okay. I have a good title guide. They do 1031 exchanges, so
Sure.
I'll mention that. Okay, back on topic. Okay, since we're on investment, it's not on the slide, but since we're on investment properties, the traditional way to buy an investment property, typically you're looking on a single family home, the minimum is 15% down. Multifamily, it could be 20 or 25% down depending on the loan program. But it's a fully documented loan. You've been through this, W-2s, tax returns, all that craziness, right? We have a loan program. Say you want to buy an investment property, you have the 20% down, but you don't want to go through the nightmare of giving me your taxes and all that and try to figure out the debt to income ratio. Or maybe you do, but the debt to income ratio doesn't work and I can't get you approved for a fully documented loan. We have, and I've done quite a few of these, we have a loan called a debt service coverage ratio. You see it on TikTok and stuff like that. A lot of people offer it. But basically, I call it an investor cash flow loan. There's no employment on the application, no W-2s, no pay stubs, nothing like that. They base it on the appraisal. So when you want to buy an investment property, 1 unit, 4 units, whatever, we order the appraisal, but we also order a rental analysis, a market rent analysis. So as long as it comes back where the 2 units, 3 units, 4 units, as long as those rents will cover the mortgage, the loan will be approved. Pretty easy. We just brought on a new investors that will go on the Airbnb stuff too. So if you're
Yeah.
planning on doing Airbnb, you actually make more money. Some of the loan programs that offer that don't rely on that. They want a normal 30-day, 12-month lease. But we have some options otherwise. I just thought I'd throw that out there. So even if you don't have a job, you can still get an investment property.
Called again?
DSCR, debt service coverage ratio. That term is more used for commercial real estate because commercial real estate, unlike residential, commercial real estate does not care what you personally make. And yeah, you have to have decent credit in that, but they focus just on the commercial property. as long as the commercial property cash flows, the commercial bank will give you a loan. This is sort of similar to that, but we're doing it for residential properties. As long as they cash flow, we're gonna give you the loan. You still have to, show where you got the down, the 20% down or whatever the money. You have to show where that is. Hopefully it's in your checking or savings. But it's a nice option. If you don't qualify or you just don't want to deal with the paperwork, it's not a bad option, so.
That was worth the price of admission.
I'm sorry?
That was worth the price
Oh,
of
well, thank you,
admission.
thank you. And that's not even on the slide, and thank you for doing the slide. I was bad this week, I couldn't get to it. All right, so just two more things. Bi-weekly payments. Most lenders offer these. We have them. If you did a loan with us, once your loan closes and you log in, you can choose to make 26 bi-weekly payments versus 12 monthly payments, and that will shave your mortgage off. So you just closed and you started doing this and you do it, going forward, that shaves about 7 years off your 30-year mortgage. So it's an easy one to say, that's easy. And if you make more payments, add more principal, this is like automatic. You set it up, instead of them taking one payment out a month, they take one half payment every 2 weeks. So at the end of the year, instead of making 12 payments, you actually made 13.
Yes.
And that extra payment knocks off approximately 7 years.
Let me share with you some of our concepts because it's really based on education, teaching the fundamentals of personal finance. The first thing we know is that for most people don't plan to fail. They do, however, fail to plan. Maybe that's a little bit of an overused cliche, but it's very true in the fact that most of the financial institutions that we deal with, whether they're credit card companies or banks or 401ks, they're all kind of tugging on us. They're going to do business with us. Nobody's sitting down and putting together a financial game plan for the client, right? That's what we do, which is very different. As a company in Primerica, we're a distributor of financial services, but for our clients, we put together a financial game plan called a financial needs analysis. It's a customized written game plan that covers all the critical areas in your life. This is what it looks like, right? And it covers a budget analysis, a cash flow analysis, retirement planning, certainly life insurance, debt elimination is a big one for many people, college education, goals for the future. Best part about this is totally complimentary, no strings attached. We do this because we want to make sure we're focused on the client's needs. Well, not what we have to offer, it's what the client needs. If I drew an analogy for you, if you went to the doctor someday and you said, "Doc, I'm not feeling good," and the doctor says, here's a couple prescriptions, go to the pharmacy and get them filled, right? We would call that malpractice because the doctor didn't examine the patient, doesn't really know what the problem is. Unfortunately, many of the financial institutions, they're just offering products. They don't know what the need is. We focus on the need. Very comprehensive, customized to our clients, totally complimentary, no strings attached, because we want to make sure we're focusing on what the client needs. And it really comes down to providing financial education for what it is we do. By the way, we call it a financial GPS, right? Think about another good analogy. If you're trying to drive to a destination you've never been to before, let's say from here to Columbus, Ohio, right? You're going to have a guidance tool. Might be somebody sitting in the front seat who's been there before taking you there, but chances are you're going to use your GPS system to get you to your destination without getting waylaid, right? Well, if you don't have a guidance system for your financial future, you're going to get waylaid, right? That's just the facts. So then if you move ahead one, right? We know the real problem comes back to the fact that money doesn't come with an instruction manual. Right? Most of the things we have of value these days come with an instruction manual, right? But of course, we all sat through Money 101 in school, right? Anybody? Nobody? You all missed that class? Yeah, me too. But I'll bet you learned some geometry and some trigonometry and some history, right? And use that stuff all day long, right? Not, right? But we all use money day in and day out. And without the fundamental education, we really struggle, right? We don't sometimes know who to turn to. Sometimes we make no decision out of fear of making the wrong decision, right? So one thing we have to offer y'all, which might be a benefit, is a book called How Money Works, right? I ordered these in and didn't get them in time, so there's a sign-up sheet there. If you'd like one, put your name down, put down an email address or a physical address, and I will mail one to you. They're totally complimentary, but they're all the fundamentals, right? Using time and consistency, paying down debt, buying the right life insurance, avoiding taxes. Hey, what do we learn about the wealthy all the time, right? They know how to manage the tax system, minimize their tax exposure. There are tools out there for the average consumer. Something like a Roth IRA to build a tax deferred in a tax-free withdrawal account. Same thing with something called a 529 plan if you have kids, right? Save money for your kids' college education. Money comes out tax-free. You all know what 529s are? Anybody?
Yep.
Yep. Are you all aware of the recent change that took place that if you don't use the money, because a lot of my clients say, well, what if my child doesn't need the money? What if they get a scholarship or they don't go to college? Well, now you can transfer that money into a Roth IRA for them, up to $35,000. There's some limits. But the fact is, the government is making it incentives for us to save for our long-term retirement planning. And we offer mutual funds. I'm sorry, I didn't catch your name.
Tony.
Tony was talking about opportunities to grow your money. We offer long-standing portfolios that have growth rates, some quite oftentimes in double digits. Not a guarantee, not an offer right here, because then we've got to hand out prospectuses and all that. But in the right vehicle, money can grow, and someday being able to send a child to college without borrowing a mountain of debt at the end of 4 years, right? That's the goal for most of our clients. And in the FNA, we can put that in play, right? We can put that in play. Same thing with retirement planning. How about a down payment on a house? We go to the next slide, right? Well, this is the financial literacy again. There's also one for kids, right? A parent's guide for children. So again, if you're interested in one of these, see me, and I'll make sure you get either a digital copy or a hard copy. And then the next slide is some of the fundamentals we teach, right? In the FNA, we teach our clients how to have accounts for different purposes. Obviously, the first one should be an emergency fund, right? As homeowners, we all know there's a potential emergency. Who was talking about, hot water heaters don't last forever, right? Dishwashers break down, washing machines break down. And if someone doesn't have money to fall back on, what do? They start building their debt cycle, right? And that sometimes takes years to get out from underneath the debt cycle. If you've built up credit card balances, things like that give you tax-deferred growth. Again, it's all about managing the tax exposure in many cases when it comes to wealth building. And then lastly, one of the things we encourage our clients to do is to protect their investments, right, with an insurance program, all right? When it comes to owning a home, right, in most cases, there's a mortgage involved, and there's breadwinners in the family. Most families have dual breadwinners, right? If one of those breadwinners passes away, there's going to be severe financial stress there. They could even possibly lose the home, right? I think you shared some examples of me where somebody had to, major changes in their life. It's bad enough they lost one of their family members. Now they might lose their house too, right? So income protection comes in the form of life insurance, and we're a term life insurance company. Many of you have maybe been exposed to cash value policies. It's real big. Someone mentioned TikTok earlier, universal life, index universal life. Please see me. I will educate you on those things. I can mathematically prove it to you. They are not in the best interest of the consumer. Buy term insurance, right? We all get insurance for our cars. We have to, right? Because we want to replace our car if it breaks down. Chances are if we own a home, we want to make sure our home has proper insurance there. As you had mentioned, to make sure that if it has an issue, we can get it repaired or replaced. I think most of us agree our lives are more important than our cars and our homes. Or our cell phones, right? Many people have cell phone insurance. So for $40 or $50 a month, you can get probably $500,000 worth of coverage. Based on age, based on some health issues, if someone smokes, it's a little bit more. But $40, $50 a month, you can get a 30-year level term probably for $500,000, right? And make sure that the mortgage is paid off should the breadwinner pass away unexpectedly. Chances are most of you had an experience where you knew someone passed away unexpectedly, right? And what's the resource for many people? GoFundMe, right, to pay for final expenses. That doesn't replace the income of the breadwinner lost. That doesn't pay off the mortgage to protect that home for the families, the survivors. That's part of the financial game plan that we put together for our clients. Again, if you're interested in one of these, let me know. I'll certainly make
And I
arrangements.
can give you a perfect example what Drew is mentioning right now. We recently happened to sell one of our sellers, one of my very dear friend home. Her husband passed away. And unfortunately, like all of a sudden, and unfortunately, she didn't had. She had all the will and everything written, but she couldn't find all those papers. So long story short, her heirs, her relatives, and everybody were after that property that they will get their bite in that big pie thing. And she was so stressed. We put it the house on the market and all, and later, and she was so stressed. We had the danger of that dealing fall apart, and she was so stressed that I don't want to give anything to anyone. This is my property, and that my husband put it on my name. So these are very important, that you have the right documentation, you have the insurance, because anything can happen, unfortunate circumstances to anyone. So protect yourself, because you have worked very, very hard for this home, for any of your assets. So protect yourself the right way. And since then, I felt myself, I mean, we have our wills, everything written, but since then I started educating my homeowners and my home sellers. Because before that, I never felt that, this was so important. But when I saw that transaction, and it was so helpful, finally we closed. But then I start talking, and I got drew into my process, because this is very important. You can lose. She could have lost her entire home. Just if at the last minute, Deepak stepped in, and we did so much, like, long story. I mean, again, there was a very, very long process and stressful process, but we finally helped her close. She was actually my neighbor, my past neighbor, and I really, really, really wanted to help her.
Is it because of the document, she didn't got the document in time?
Not in time. She didn't have the right documentation, and some of her, like, because she was an old lady, she misplaced this and that. She didn't know what she was doing, and there were so many complications happen.
So in that case, let's say husband have not mentioned anything to the wife that I have a documentation, I have an insurance, right?
So what
Yeah,
happened?
Let them finish.
But whoever has given that insurance, right, the agent, he might know everything. That he has given the insurance to the husband. So that
She
lady
did
can
not
take
know.
help of the agent.
Sometimes, first of all, many people does not even write the will. First of all.
Yeah, right. That.
First of all, I mean, in my family, many people didn't have the will. I was like, after that, I was like, okay, come on, right? Everybody should have the will,
That's good.
Second, even if I didn't know where he has written.
Yeah, that happens a lot.
Yeah, I mean, usually wives do not know, or if the wife is doing that thing, husbands do not know. I mean, some other spies do not know, because one of the person is a decision maker and doing the financial decision making. So before, I did not know, and I still do not know many of the things, what he's doing, who he's talking to. So this is very important. You need to know everything about everything. And like you're talking, insurance person, but if I don't know, whom I am gonna go?
Who's the agent?
Who's the agent? What he has done? What
Right.
your spouse has left behind? So all those things was a mess in that situation. So there could be many complexities. So please, I mean, this is one thing I felt like, oh my God, this was so unfortunate to see that happen, but finally we closed. So it's very important.
One thing I wanted to just regarding the term life insurance that he talked about, we sell homes to people who buy $500 million home, and they don't have the proper coverage. You are carrying a $500,000, $600,000 mortgage. God forbid something happens.
HVAC ductwork, the ductwork that runs through your house that brings your heating and air conditioning, 3 to 5 years depending on the use of the house. If you have a lot of dust or grease in the house or pets, they usually cheat towards 3 years. If it's normal use, not much dust or anything collecting in the house, generally every 5 years. Generally, you have to have that done professionally. There's no easy way to do that. They got to run brushes through the system. You got to collect the dust. You can make a really big dusty mess in your house if you don't do it properly, because you'll just be blowing the dust all over the house. So just be mindful of that. But generally, it's got to be done professionally. There's many duct cleaning companies. If you live in a townhouse or a condo association, a lot of times you have to provide them with a certificate every 2 years that you had your chimney cleaned or serviced, even if you don't use it, and your dryer vent cleaned. So that's usually every 2 years also. So just be mindful of that.
Okay, thank you.
An understanding in the hospitals where the doctors are, if it's an emergency, they say you say you're the spouse, they tend to believe that. But let's just say that, it wasn't the case, right? You have people coming saying, you should not be talking to him. We've had cases where we've had families call us where they say one sibling is saying the other sibling is going and stressing mom out in the hospital.